Inflation surprise shakes the market. Have gone grocery shopping that same box of cereal costs more this month than last again? Well, this week's inflation report gave us one of those oh no, not again moments, especially with wholesale prices jumping the most we have seen in years. And that shook up Wall Street and interest rates forecast. So let's start with the interest rates. The 30-year fixed mortgage started the week at 6.73% and ended at 6.78%. Not a massive move, but enough to make a difference in your monthly payment. For DSCR loans, the ones we use for investment properties, we add about 1%. So you're looking about 7.5 to 7.875 right now. For the working class investors, that means the same rental property you run numbers on last month might now have a slightly tighter cash flow, but there are still deals if you know how to structure them creatively. Let's start with inflation. On Tuesday, the consumer price index showed prices overall went up 0.2% in July. Not terrible, and down from the month before year over year. We are at 2.7%. But here's the kicker. Thursday's producer price index, that's what businesses pay for goods and services, spiked 0.9% in just 1 month. The biggest jump since 2022. Why does that matter to you? Because higher business costs often trickle down, meaning your groceries, gas, and even rent could edge higher in the coming months. Jobless claims, steady but watchful. Jobless claims came in at 224,000, still in that healthy range. Translation, people are still working, paychecks are still coming in, and tenants can keep paying the rent. For real estate investors, that's a green light that the rental market is stable. Retail sales, consumers keep spending. Retail sales rose at 0.5% in July, with car sales leading the way. Why? Folks were rushing to buy before possible tariff-driven price hikes. Think about it like grabbing the new fridge before the store says, next week it is going up $300. That same urgency can happen in housing when people expect rates or prices to rise. The headlines that shaped this week. Markets are still wrestling with inflation fears, possible Fed rate cuts being delayed, and political headlines including questions about the accuracy of some government data. Uncertainty like that can make rates jittery, which is why locking in smart loan terms now can be a winning move. So here's the big picture. Prices are still rising, but not everywhere. The job market is holding up, consumers are spending, and yes, rates are a little higher, but that is exactly when savvy investors can step in with the DSCR loans and creative financing to grab properties others might overlook. In one sentence, we saw mixed inflation signals, steady jobs, and strong spending. A market still full of opportunities if you know how to navigate it. And just like that, this is already all news. Thanks for watching. If you found this video helpful, give it a like and subscribe for more expert insight on real estate investing. If you're ready to take the next step or have questions, my contact info is in the description below. I'm here to help you understand the market, find smart loan options, and turn today's challenges into tomorrow's cash flow.